invite the first speaker of the day, CA Naveen Khariwal sir, onto the dais. I request Mr. Sheelman to escort the speaker, welcome him with a floral bouquet, and to give a brief about the esteemed speaker.
Hello everyone. First technical session. I take immense pleasure to introduce you all CA Naveen Khariwal sir. Sir is in practice as a chartered accountant and specialization in direct taxes. Sir also speaker at various seminars organized at various branches of ICA. He is also presented papers at various forums like FKCCI, Accenture, SAT Labs, KPCL and others. He is a keen cricketer, having represented college and university matches and also played a league with Karnataka State Cricket Association. With this brief introduction, I present you before CA Naveen Khariwal sir. Now I request sir to begin with the first technical session on discussion on important classes of Form 3C.
Sri Ravindra Pure, Chairman Sikasa, and all my future professional colleagues, future chartered accountants. It's heartening to note after a long time, the hall is jam-packed with students. The credit for this should go to the present chairman, who is an organizer par excellence, and in gathering so many students. Anyway, as we are short of time, the chairman has asked to discuss only about the important clauses of 3CD. This being, tax audit season now. September is fast approaching. You can't expect any relaxation in the due dates, rather any extension in the due dates. So what about Form 3CD? Straight away come to the topic. Probably we have a time for question answer session, I don't know. 1.5 hours is the time given. Wherever you feel the need to ask a question, you go ahead. You can go ahead, interrupt and ask any question you want. Restrict yourself to the topic. Now there are 41 clauses in Form 3CD. Now what about, you are in 2016, gone are the days, when we used to sit and watch. Now also we are doing it, but you can't, tax audit cannot be restricted only to watching nowadays. You just can't watch and collect all the documents, compile it and leisurely give a tax audit report. Everything has to be done through electronic means nowadays. Everything has to be electronically filed. You will have to be dead sure, 100% sure, and then you can hit the button for uploading. Be it tax audit report, be it the accounts, financial statements, balance sheet. So this is the age of electronic filing. Now what about it? Even the return of income, you have to fill up every column, every annexure has to be duly filled up. Otherwise, it may become a defective return. The 139(9) provisions, it may become a defective return. A letter will come from the CPC telling that it's a defective return, and I am giving you 15 days time as per law, 15 days time to rectify the defect. If not, it would be treated as a non-EST, void ab initio return. Now we'll quickly go into the 41 clauses. Now Form 3CD has got 41 clauses. Form 3CA, 3CB is the audit report. What is 3CA, sir? Audit done by 3 chartered accountants, 3CA. Yes, sir? Myself, Ravindra Pure and Geeta. Audit done by 3 chartered accountants. What is 3CB then? Audit report. 3CA, audit report. What is 3CD then? Pardon? We are going to be the only person on this earth now, probably 1 or 2 years down the line, only person on this earth who can certify a balance sheet. We are already certifying. You are going to be the only person on this earth, entire universe, who can certify a balance sheet. So that is your 3CA, 3CB is you guys will have to certify in future. So Form 3CA, audit report in case of a company, 3CB is in case of other than a corporate associate, other than a corporate associate, in case of all non-corporates. What about 3CA and 3CB? Before this, I would like to tell you, the auditor, what you are under the impression in your auditing. An auditor is a watchdog and not a bloodhound. Change the sentence. You are in 2016. You will have to suck blood now. I tell you, you have to suck blood now. You have to change your statement. You are no more a watchdog. You can't be a watchdog anymore now. You will have to suck blood. In the changing scenario, economic scenario, financial scenario, entire world scenario, the way the business is operated, you can't remain a watchdog now. So you have to change your mindset first. You see this, I just wanted to inform you, the CAG, the Comptroller and Auditor General of India, has tabled a report on the mistakes committed by Chartered Accountant in both houses of Parliament in Lok Sabha. The CAG has pointed out these are the irregularities, these are the mistakes committed in the audit report by the Chartered Accountants. It's been discussed in the Lok Sabha Parliament. Well and good now. They don't understand law also. You can discuss our mistakes. But just aside, you'll have to be serious. These are the mistakes committed by Chartered Accountants. So, nothing to be critical about it. We'll have to improve from our mistakes. So, what are the mistakes pointed out by CAG? They say this, where the Chartered Accountants failed to report full and correct information in 367 cases, leading to short levy of taxes of 2,813 crore. And where the AOs failed to utilize the information available in 102 report certificates, I am not bothered. AOs means assessing officers, failed to utilize information, no problem. Some of the important other findings, the tax auditors failed to give correct information relating to allowance of depreciation. They said allowance depreciation involving short levy of tax of 457 crore. Then the tax auditors did not report correct information regarding brought forward loss depreciation, resulting in irregular brought forward loss allowance in 46 cases involving short levy of tax of 567 crore. Sir, who fills up the return? Who uploads the return? Who fills up the column? The articles. Huh? Blame is mine. I am to be blamed because I am signing the audit report. Now first he says depreciation. Now can't we fill up the details about depreciation? What about depreciation, depreciation rates, unabsorbed depreciation, etc., etc. Next is brought forward losses. What about brought forward losses, carry forward losses? 557 crore is the loss to the exchequer. Because I am giving, giving incorrect information. I have not reported correct information, brought forward losses. As you very well know, 72, 73, 74, 74A, 73A. 72 is business loss, 73 is speculation loss, 73 capital is loss from specified business, 74 is loss from capital gains. 74 capital is loss from owning and maintenance of resources. What about it? How many years can it be carried forward? Section 72 business loss can be carried forward for 8 years. To be set off only against business income. 73 speculation loss can be carried forward for 4 years. To be set off only against speculation income. 73A loss from specified business can be carried forward infinitely. 74 capital loss 8 years. Short term gain can be set off against long term loss, long term gain, long term loss can be set off only against long term gain. What is left? 74 capital loss from owning and maintenance of resources. Carry forward for 4 years. Finish. See to it the return is filed within the due date specified under 139.1. So says 139.3. Connect one more section. If you are final student, section 80 will come. One more section, section 157. What is section 80? Section 80 starts like this. Notwithstanding anything contained, it's a non-obstant clause. Notwithstanding anything contained in chapter 6. What is the heading of chapter 6? Yeah? I want a vibrant crowd. Yes? Set off and carry forward of loss, not deduction. Chapter 6 says deductions. Chapter 6, then you will tell results will come. I did very well, Katya. I am going to apply for revaluation. 100% you blurt out without thinking. Chapter 6, deductions. Anyway, chapter 6, set off of loss or carry forward and set off of loss. When I go to section 18, chapter 6, what it says? No loss shall be allowed to be carried forward unless it is filed in pursuance of return filed under 139.3. When I go to 139.3, it says no loss shall be allowed to be carried forward unless it is filed within the due date specified in 139.1. That's all. This is all about sum and substance. What about unabsorbed depreciation? 32.2. It can be carried forward infinitely. Section 71B, loss from house property. Return of income need not be filed in time. Okay? Unexplained, then what else is left? Unabsorbed capital expenditure on scientific research. Then family planning expenditure. All this you can carry forward. So, meaning to say, just like touch one chapter upon, you read the law, then apply the law. CA is the only course where you are going to apply the law. You have to apply the law, you have no choice. You take income tax, these are all the sections. Now you have to fill up in the columns. It's a clerical job. You can easily do it. It's a clerical job. Filling the return is a clerical job. It's not a big deal. Fill up the correct columns, annexures. That's all. Why should CAG point out in Parliament? They don't know how to fill up even brought forward losses, carry forward losses. Probably I did not know the section there, so student made a mistake. So read the section, jot down the points, then apply practically. As simple as it. Next it says 42 cases personal capital expenditure was incorrectly allowed as the tax auditors did not report the amount in their tax audit report, resulting in short levy of tax of 477 crores. Then they said CAs have certified wrong information claims for various exemptions and deductions in 74 cases, having tax effect of 259 crore. These are all the mistakes committed, pointed out by CAN. Last one, you see, CS gave incomplete information in tax audit report certificate in 132 cases. It is you who gave incomplete information. Last date the claim can you uploaded. But it is my responsibility. I am not telling that it is not my responsibility. You see there now, so many mistakes. See the third para. We found that 18.87% of the chartered accountants, around 12,435 CAs for assessment year 13-14, issued more tax audit reports than prescribed by ICA. So earlier, those days it was how many, sir? 2013? 45? Now it is 60. We also got cases where the CS did not mention their membership numbers. You didn't get more leave. What to do now? Everything is in your hand, return is in your hand, no leave, no extra statement, no bonus, more work. Return is in my hand, I will not fill your membership number also. Excellent. So then you come down there, that is the most important for me. The ITDs did not refer any case for professional negligence to ICI for taking action against erring CS in terms of 288 of the Act. 288 of the Act, explanation below 288 gives the meaning of authorized representative. You are going to be authorized representative of your clients in the future. So this is most important. By the time you become CS, I think, they will start taking action, I think. So you have to be careful now. Now coming quickly, this one important decision, Vijay Meghan's case. The tribunal had no business to comment on the education of a chartered accountant. What it says, serious doubts cast on conduct of a chartered accountant CFO. The tribunal is commenting on the methodology of training of CPE of ICA. They are telling today's chartered accountants are manufactured in coaching classes which are mushrooming in every nook and corner, every street. So they lack the common sense of their old predecessors, old CS. That is what the tribunal was commenting it, just to inform you. Now quickly we move on. What about this 3CA 3CP new form which has come in 2014? It has total 41 clauses. The old form consisted of 34 clauses. New clauses introduced are 7. Modification around 18 clauses. There are no changes in 16 clauses. Annexure 1 Part A and B previously existing is deleted. Now what are the changes? The changes made in 2014 notification are being highlighted in red. If you see their form 3CA, this is the audit report. No problem, sir. Here I have no problem. I am giving my report. Now the change made is highlighted in red from 2 ending on. What is that? Now they are telling for the period. Which period? So I have no problem. Period beginning from 2 ending on, they are giving this date. There is no problem in this. See the para 3. These are the changes made. In our opinion and to the best of our information, as you know, it is the habit of the CA to give in every audit report we write like this. In my opinion, our opinion, to the best of our information, and according to examination of books of account. Fine. I have no problem, sir. I have to give my report based on the examination of books of account. Fine. And according to examination of books of account, including other relevant documents. See how the government wants to, take the information out of chartered accountants and make him responsible. He is telling, and on basis of other relevant documents. What are other relevant documents? According to examination of books, no problem. We'll see, including other relevant documents. So he's telling audit report should be given based on an examination of the books of account, including other relevant documents. And explanations given to me as the particulars given in the form 3CD are true and correct subject to the following observation and qualifications. Have you seen anybody? Following observation. What are the observation qualifications? What are the qualifications? They have gone through. In Form 3CA, same requirements and same amendments have been made in Form 3CB also. Period beginning from 2, there is no problem. Same thing, subject to the following observation qualification. Now there are 17 observations and 17 qualifications. What are they? I think all of you know in your office should have uploaded the returns taking any of these observation qualification also. Let us go through these observations. This is taken from the ITR utility form itself. What is the first one? Proper books of account to enable reporting in 3CD have not been maintained by the SSC. Anybody ticked here? Any of you ticked, sir? Whichever you have ticked, you should tell me, let me know. Next, 2. All the information and explanation with the best of my our knowledge and belief were necessary for the purpose of my our audit has not been provided by the SSC. Anybody ticked? No? Third one, documents necessary to verify reportable transaction were not made available. Yes, sir? Nobody? Fourth one, proper stock records are not maintained by SSC. You have ticked. Yes. Few are telling yes. Okay. Next, valuation of closing stock not possible. Yes. Excellent. What is their harm? It's not your responsibility. No, why do you worry? Who will know? You take whatever you want. So the third one says, fourth one says, proper stock records not maintained. You are truthful enough to tell yes, I ticked. Valuation of stock not possible. Yes, you ticked. Trading account is there. You have calculated by closing stock. You have taken the figure there. You have added the figure and uploaded the report, and here you are telling proper stock records not maintained and valuation of closing stock not possible. How can you contradict yourself? Rather your principal, not you. How can you contradict? Proper stock records not maintained. For heaven's sake, when you go through, you will realize all the 16 observations are negative observations, negative qualifications. Think thrice before you tick. What is the whole objective of this session now? 1.5 hours. I have a similar session in the evening for the members at the hockey grounds, 5 to 8. What is the whole objective here now? You should be afraid to sign the tax audit report. That is the whole objective which I am taking the session. At the end of the session, you should be afraid. Think thrice before ticking anything. Everything is electrical now. Proper stock records you ticked. Valuation closing stock not possible you ticked. And there you have arrived at the figure of closing stock. So be very careful. Next, yield percentage of wastage not ascertainable. Okay. Seventh one, records necessary to verify personal nature expenses not maintained. TDS returns could not be verified with books. Ticked. TDS returns could not be verified with books. Now why? Once we got caught, we will not tell yes again. Once he caught us, now I will not tell yes. Next, records produced for verification of payments through account pay check were not sufficient. What do you mean by this? Records produced for verification of payments through account pay check were not sufficient. What do you mean by this? What are you checking? See, there is a link everywhere now. This is the audit report. 3CA, 3CD. Link with the 3CD. Link with your accounts. Accounts means your return, financial statement, balance sheet. Everywhere it is linked. So now we are telling here, records produced for verification through account pay check were not sufficient. That means what? 40A3. Correct? How can we check, whether the check was account pay or not? Or was it crossed or not? Or was it crossed at account pay? I can cross the check. After crossing the check, I can write account pay. I don't know. The check is lying with the banker. How can you verify? You can't verify. So creditors under MSME are not ascertainable. Prior period expenses not ascertainable from books. So all these are there. Next, fair market value of shares under 56 to 7A, 7B is not ascertainable. All this link with the 3CD clauses. Report of audits carried out by excise service tax department not made available. See how clever the department has become. Rather, government has become. I am doing an audit of the businessman under 44A, section 28 to 44. This is my responsibility. They are telling me reports of audit carried out by excise department, service tax department were not made available. How cleverly they are making me do all the work. If you want to do a tax audit, minimum sections you should know in the Income Tax Act. Out of 298 sections, at least 70-75 sections you must know. You just can't go there blindly, without knowing the law. You just can't go for uploading. Go through at least 70-75 sections are required. On top of that, he's asking, you go through the excise audit report, go through service tax audit report. Everything is required. See the next point. GP is not ascertainable for financial statement prepared by the SSC. Why not do the audit then? GP is not ascertainable. You want me to tick? Then I have to collect fees from the client. That too after deduction of TDS for ticking this point. GP is not ascertainable from financial statement prepared by the SSC. Next, see this point. Information regarding demand raised, refund issued. Okay, demand raised, refund issued during the previous year under any tax laws other than Income Tax and Wealth Tax Act are not made available. So he is also asking you to go through all the tax laws other than Income Tax and Wealth Tax, whether any demand is raised during the year or any refund is received during the year. Those details also he wants. This directly will be linked with clause 41 of Form 3CD. Clause 40-41. Then if you see Service Tax Excise Department audit, that is linked with clause 37, 38, 39 of Form 3CD. There is a link between audit report, 3CD and the return and your financial statements. The example I am giving you. Again 56 to 77 is also linked to various clauses of Form 3CD. Now, so what you have to do basically, what is my advice, my personal opinion, what am I doing in my office? First to 16, I don't have guts to tick. I am not ticking any of the first to 16 observations. Then what do? I take all those notings and I dump it in that others. That 17 is there. For example, 48 you used to give that no. You used to give that notes or stock inventory. The assessee is dealing in numerous variety of stocks. Therefore, it's not possible to maintain the stock register or whatever. Take all this, and I am not taking any of the 1 to 16 observations. I am taking everything and putting it in 17 others. I will comment on all 41 clauses. I have a simple comment ready. I will take everything and put it in 17 others. Anyway, by the time the article should be over, you will become CA yourself. So nobody is going to catch you. Now what are the changes now? Now clause 4, interesting clause, what it says, whether the assessee is liable to pay. What do you mean by the word liable? Liable to pay indirect tax like excise duty, service tax, sales tax, custom duty, etc. It uses the word even etc. If yes, please furnish the registration number or any other identification number allotted for the same. No problem. What are they telling? Whether the assessee is liable to pay any indirect tax. The word indirect tax is not defined in Income Tax Act. The word manufacture is defined in Income Tax Act. No doubt about it. Manufacture is defined in Income Tax Act. When they suddenly out of the blue ask you definition of manufacture in section 2 of the Income Tax Act, you will write as per 2F of the Excise Act in the Income Tax Act. Word manufacture is defined in the Income Tax Act. Word indirect tax is not defined in the Income Tax Act. So what are they telling? Very simple. If the assessee is liable to pay indirect taxes, please ask your client for a copy of the registration certificate, about VAT certificate, excise certificate, service tax certificate. Take those certificates, write down the registration number here. What about identification number? Registration number you understood. What about identification number? For example, import-export code. If you are under customs, import-export code, that identification number you can take and write it down. Now what do you mean by liable to pay? If it is liable to pay, a client and not registered. For example, service tax and a reverse charge mechanism. There is a travelling expenses distributed. Service tax and reverse charge mechanism. You need to be registered. The client need to be registered on service tax, not registered. So accordingly, you can think and write here. You have to collect all the certificates, write down the registration numbers. That's it about it. Next. The assessee have multiple registrations for various manufacturing units, service units, godowns, etc. under the same law. In such circumstances also, copy of all registration certificates is to be obtained from the assessee for appropriate disclosure under this clause. Okay? So this is an example. This is how it appears in the utility software. Central excise duty, customs duty, service tax, VAT, excise duty, other indirect tax duty, registration identification number. Next year by this time GST would have come. Again form will undergo a change. Again institute will invite me for again discussion on the form 360. Okay? So one can add further rows as per requirement. There is no limitation. Now, this is one instance, normally I keep googling to get all the information. Nothing original. Nowadays, as even the movie script is there, it's taken from all the sources. This is also taken from all the sources. And then it is prepared. Nothing, no original script. So this is taken from the Google, when I was just googling. Now what they are telling, a Maharashtra website, names of 1,271 suspicious dealers, it has been put on Maharashtra website. What are they? Simple thing they are telling is, you have issued invoices without delivery of goods. What suppose your client has a transaction with any such person whose name is available on the Maharashtra website. What to do? See, this is the risk of signing the report. Now it's updated. It says last updated list of 1,207 suspicious dealers who have issued false bills without delivery of goods displayed prominently on the website of Government of Maharashtra. Now we don't know what is the position now. It may have increased or whatever. What if your client, one of them has got a dealing there? How to report? This is important. So I have just discussed about that. Now this is sample reporting. Service tax, name of the branch, corporate office, registration number. Service tax A division, this is the registration number. B division, central excise duty, similarly. Karnataka value added tax, Kerala value added tax if you have a branch there. Customs duty, etc. etc. So this is how you have to report all the godowns, multiple offices and multiple departments. And on the all indirect taxes law, not only excise, VAT, service tax, so on and so forth. Next. This is one more change here in previous year from so and so, that's okay. For a new business which has come into existence, earlier it was only previous year ended 31st March. You will write 2016 now this year. Suppose newly incorporated company come into business is in existence from 1st of March only. So 1st of March 2016 to 31st March, that's all. This is in case of amalgamations, demergers, reconstitution, new business, closure of existing business, etc. Date of beginning, ending of the previous year may be different. The auditor may accordingly mention the relevant date of beginning and ending of the previous year. See, all these notes have been taken from the guidance note itself. So there is no question of any confusion. Everything is as per guidance note. So guidance note is sacrosanct for me. Guidance note issued by the ICI. I have taken the relevant clauses. Next, clause number 8. See, if this side old form is blank means there was no such clause there in 8. Now this is 8. Indicate the relevant clause of 44AB under which audit has been conducted. Yes sir, how many clauses are there 44AB? 5 clauses? 4 clauses? Yeah, tell me. 44AB clause A, what is clause A? 44AB clause A, clause B, clause C, clause D. 44AB clause A is business. 44AB clause B is profession. 44AB clause C and D are all presumptive taxation. What about 44AB clause A, B, business? What do you mean by sales, turnover, gross receipts? Is sales and turnover both same? Sales is different, turnover is different. What is the difference? Alphabets. Why is the section using sales, turnover or gross receipts? What do you mean by gross receipts? Does it mean amount received from debtors? Does it mean gross receipts? Does it mean amount received from debtors? I need to club there. So that is for you all to discuss with your auditing teachers, auditing lecturer. We can't discuss what is sales turnover. Class to class analysis of Form 3CA, 3CB, 3CD. 44AB clause A, sales turnover. We can't discuss now. It will take long time. Sales turnover or gross receipts exceeds rupees 1 crore, and from next year it is 2 crores, or this year is 2 crores. Assessment year 16-17 should necessarily exceed the specified limit. Then you tick here if it is a business. If it is a profession, 25 lakhs, and then it is 50 lakhs of budget 2016. Similarly, budget 2016, the 2 crores limit is extended only for the purpose of 44AD. Don't get confused. Only for the limited purpose of calculation of turnover for 44AD businesses only, that 8%. It is not for the other businesses. So what is the moral of the story? Business is safe. You can sign on tax audit reports. You have to do audit. 1 crore only turnover. Don't think that's extended 2 crore, so my audits became less. So 1 crore is the limit only. 44AB clause A is business, clause B is profession, clause C and clause D is your presumptive taxation. For example, 44AD, where you can declare as such higher sum also. It says either 8% or more. You can even declare 15%, 20%, 40%, whatever. If you declare below 8%, then you are necessary to do the tax audit. Now the tax audit report signed under 44AD is not included in the limit of 60 tax audits. You can sign 1000 tax audits under 44AD. I repeat, you can sign even 1000 tax audit reports under 44AD. 44AB is restricted to 60 only. Now quickly we need to move forward. There are important clauses. Now see, very interesting clause. What is clause 11? Clause 11A. Whether books of account are prescribed under 44A, if yes, list of books so prescribed. Then B says, list of books of account maintained and address at which books are kept. So what is this clause? This clause talks about books of account. Books of account prescribed, books of account maintained, books of account examined. Prescribed, maintained, examined. You wouldn't have examined anything last date. You would have signed that report. That is different. Prescribed. What is it prescribed? So now there is a business here. There is this. What is this now? Neelkanth Jewellers business is there. Or say MP Swarnamal is there. Take Malabar Jewelry House. So Malabar Jewelry turnover is 100 crores. Example. So what all books they need to maintain, sir? What all books they need to maintain? Law is telling whether books of account are prescribed in 44A. If yes, list of books are prescribed. Malabar Jewelry, turnover 100 crores. What all books are prescribed? Pardon? Nothing is prescribed. Books of account, he says, required under any other law is to be maintained. Come out, don't worry, tell me. Pardon? Don't give me all CA student look. Be cheerful. Tell me. 44A, please tell me. Is it required, not required? Pardon, sir? For jewelry business, it's not prescribed. He says for jewelry business, nothing is prescribed, sir. Yes, sir. Any other answer? Exactly. For business, there are no books prescribed. What are prescribed? It is prescribed only for the professionals. Notified professionals, that too. So 44A says, no books of account are prescribed for a businessman. Then what books to maintain? If you go further into the section, it says, as such books of account may be maintained as would enable the assessing officer to correctly deduce the income therefrom. So you can maintain whatever you like. You can maintain cash book, ledger, day book or whatever. You know, which is convenient for you to maintain. Collect the correct profits therefrom, and it's also convenient for the assessing officer to correctly deduce the income therefrom. No problem. Whether books of account are prescribed, if yes, list of books are maintained, fine. See the next one. List of books of account maintained and address at which books are kept. Now, most of you are also doing, tally software. I mean, you are doing tally ERP or whatever. You are also maintaining the books of account. Most of the CS, you may be maintaining books of account there in the office. Audit also you are doing there. You are maintaining books of account. You are doing bookkeeping. So give the address you are telling. List of books of account maintained. Address at which kept. Address is my CS address. If they ask you, what do I know, sir? You are maintaining books. I gave your address. Or then tell you tally, you take it home, no, it's getting later, purchase bill, sales bill, do it at house, give articles address. You took home, you took it home for, maintenance of books. What is the sum and substance of this class? What is the purpose of this class? To come for survey. Whatever address you have given, wherever the books are kept, the department will come for survey there. So don't give the address of yourself, don't give the address of your principal, give the address of the client only, registered office. They may be doing the bookkeeping, they may be doing the accounting work. You can't give the address. You can't tell books are lying in my office and give the address there. Department is going to see that what is the why want list of books and books where are they kept. Suppose it's kept in cloud. SAP, you are maintaining the books of account in SAP. Now from here I can access the books of Lenovo. I am doing the account keeping for Lenovo example, bookkeeping. From here I can access Lenovo. So books of account kept. Where are they kept? Here. Yes, Narayan auditorium, whatever. It is the location or from where books are accessible. Entry where data is located, from where data entry is made, location, or from where data is accessible. Even from here data is accessible now. What is the section, what the clause is saying? Address at where books of accounts are kept. Now if it is in iCloud, if it is in cloud, give the IP address of the server. It is in California now, example Infosys. Server is in California, give the IP address of California. Because it says address at which books of accounts are kept, then continue. In case books of account are maintained in a system, mention the books of account generated by such system. Okay. If books of account are not kept at one location, please furnish the addresses of locations along with the details of books of account maintained at each location. That is, day book kept in CS premises. Then ledger kept in articles premises. What about purchase bill, sales bill, stock register kept at client's premises? Neatly you give. That is theoretical knowledge. Practical knowledge you have to see, what will I do? I can't give the addresses. I will give the address only of the registered office of the client or from which address is filing the return of income. If the books of accounts are not kept at one location, furnish the addresses of all locations, he says, along with the details of books maintained at each location. How smart the departments become. We should become more smarter. Next, list of books of account and nature of relevant documents examined. List of books of account examined, I have no problem. We will give the list. Nature of relevant documents examined, what will you write? Nature of relevant document. If you had asked list of relevant documents, I would have given, say purchase bill or sales bill or debit notes, credit notes, fixed asset register, salary records, payroll records, whatever. My shop rental agreement, all documents which are necessary for the audit. He is asking nature of relevant documents. What will you write? Pardon?
Hard copy or soft copy.
Hard copy or soft copy, she says. List of books of account and nature of relevant document. So she says nature of relevant document may be hard copy or soft copy.
Originals or maybe.
So whatever guidance note is telling, what do you mean by relevant documents? What is nature of relevant documents? You see what guidance note is telling? We will not go into the definition of books and all. So these are all the specified professions: legal, medical, engineering, accountancy, architectural profession, technical consultancy, interior decoration, other notified profession. Who are the other notified professions? Authorized representative, film artist, etc. Okay? All these are notified professions. They have no choice. They have to maintain the books of account, so prescribed. Now what are relevant documents? What does my guidance note say? Guidance note says what do you mean by relevant documents are those documents based on which the entry is made in the original books of account. For example, purchase bill. Based on the purchase bill or the credit note or debit note or sales bill, I make entries in the books of account. Purchase register, sales register. So those become the relevant documents. The guidance note says These are all relevant documents based on which accounting entry is made in your books of account. Okay. Now, how many years to maintain books, sir? 8 years. How many years to maintain books, sir? 8 years. Under income tax only, I am restricted to only income tax act.
6 years.
You amended act, now again amendment, 6 years. 8 years, 6 years. 6 years. It is 6 years only, 8 years is under the Companies Act. Under section 128 subsection 5 of Companies Act 2013, companies shall maintain books of account for a period of 8 previous years. In Income Tax Act, they should maintain period for a period of 6 years. Under Companies Act again, what about minutes? What about, the statutory records? You have to maintain since inception. From inception you have to maintain. So you can go for outer limit as you said. You can maintain for example, 8 years or 9 years. Whatever 8 years. Don't advise to maintain only for 6 years. Also, I am going off the track. The IDEA scheme is open. Income Declaration Scheme 2016. Have a time, just go through section 197 clause C of the IDEA scheme 2016. What it says, IDEA scheme 197 clause C. What it says, if an associate has earned any undisclosed income before the commencement of the scheme, that is before 1st of June 2016, if any associate has earned any undisclosed income before the commencement of the scheme, or he has acquired any asset out of the undisclosed income earned before the commencement of the scheme and not declared during the pendency of the scheme, that is the scheme will end on 30th September. Then, in the year in which department catches him, they may catch you in 2020-24. Okay, 23-24 they may catch you. Sir, 23-24 you have a property. You had a property at this Miller Stanbed area, land you did not disclose. So, you can't stand and tell, sir, and I acquired that property 2023-24, what department caught me? I acquired that property in 1990. So, all of you know the provisions of 148, beyond 6 years you cannot reopen. So, but Income Declaration Scheme Act, it is not in Income Tax Act, it is a separate chapter in Finance Act, Chapter 9. So, what the department is saying, 197C, if you have not declared the undisclosed income or the asset acquired out of the undisclosed income, in the year in which we catch you, 2023-24, although acquired in 1990, in the year in which I issue notice under 142(1), 143(2), 148, 153, or 153C, it shall be deemed to be the income of that year. Then, that means that property what I did not show to the department which I purchased in 1990, department got me in 23-24. I will tell not disclosed, or I will tell disclosed. I can give the source. I purchased in 1990, so that time I have maintained books of account. I have my bank account. I have the source, but you advise your client maintain only for 6 years. So by the 1990 books you would have torn, destroyed, burned. So in lieu of this IDEA scheme, what I am telling you, advise the client in the year in which you have purchased any property, if you have maintained books of account, keep that books of account with you safely, keep even the bank account safely. You need to prove the source to the department officials. So if you are able to prove to the source to the department officials, they will not consider it as your undisclosed income. If not, they would invoke section 197C of the Income Declaration Scheme 2016 and you will need to pay tax. One good thing they have done is it was earlier to be paid on the fair market value as on 1st of June 2016. Now you need to pay only on the index cost of acquisition. Anyway, so be careful. Quickly we are moving out now. So books are maintained on cloud-based software. Location of data entry and location of storage are different. So name and address of cloud service provider. Invoicing at depot is equal to document and not books of account. What does location mean? The location from which data entry is made or where location are or where accounts are accessible. What does the word kept mean in context of ERP SAP? Next. This we discussed. So this is how he has given here. Location, HO, address, this is the branch office, factory division, then SEZ division. List of documents not required, only nature of relevant documents. Example of relevant documents we discussed, everything is relevant based on which entries are made in the books of accounts. In the utility, there is no separate section on drop-down list for nature of documents. So what will you do? You can just write one sentence and put it in that clause 17. You remember once upon a time we did clause 17 observation, qualification, dump it there, one line. All necessary relevant documents have been examined, that's all. You need not do all the list. Next, this is clause 12. This is talking about shipping companies, tonnage tax, chapter 12G, first schedule. Straight away, and just write it down. Next, what is 13B? Has there been any change in the method of accounting employed vis-a-vis the method employed in the immediately preceding year? So if there is any change, how to give? He says given this format, serial number, particulars, increase in profit, decrease in profit. So department is telling not only you buy the vegetables, you cook the vegetables, also serve me the vegetables with a spoon. I just need to eat. Now it's telling you buy the vegetables, cook the vegetables, serve the vegetables, take a spoon and feed me also. It has gone to that extent. Why they are telling? First they are telling whether there has been any change. What method of accounting are you following? How many methods can you follow, sir? 2, 3, how many? 2 or 3? Cash, mercantile, hybrid system? Discontinued. Discontinued because of pawnbrokers. From 1st of October 1998 onwards, what they used to do earlier? They used to account income on receipt basis, expenses on accrual basis. So finance minister was very clever. Either you account expenses also on receipt basis, or you account even the income on the accrual basis. You can't, for expenses accrual, salary payable, whereas for income, I'm not received, only received. Not possible, you can't follow hybrid system, follow either cash or mercantile or accrual system of accounting. Income from salary, which method to follow, cash or mercantile? Cash system or accrual system? House property? Cash or accrual? Then profits and gains of business or profession? Cash or accrual? Only accrual. And capital gains? Accrual. What about what is left now? Other sources? Accrual. Cash. Anyway, two systems are there. Tell something. Cash or accrual? My dear students, you have forgotten the basics. Income from salary shall be taxable on receipt basis or due basis, whichever is earlier. Section 15. No portion of cash or mercantile or accrual. Income from house property shall be taxed on annual value. Section 22-23. There is no portion of accrual or receipt system. PGBP and other sources only, you can offer to tax on accrual or cash system. Capital gain, section 45 transfer. Section 45 no cash. Section 45 only transfer. If it's a transfer, you have to offer to tax. If not, you have to keep quiet. No question of cash or mercantile system. Only two heads of income. Yeah, PGBP and income from other sources. Now if there is any change, for example, earlier I used to offer the FD accrued interest on say accrual basis and I used to claim TDS. Now I want to offer only on maturity, that is cash system. So you have to tell here, yes, there is a change in method of accounting from income from other sources. FD for example, now earlier I was falling on receipt basis, now accrual basis or whatever, because you want to claim TDS, form 26AS, accrual system, it is reflecting, but you want to offer tax on maturity basis. But unless you offer the income, you can't claim TDS, so you change your system of accounting. So it says particulars, increase in profit, decrease in profit, whatever. So these details are required to be given. Similarly for this 145A, we will come here also. 145A is also same thing. Method of valuation of closing stock. If there is any change, you will have to give the details in similar fashion. Particulars, increase in profit, decrease in profit. Then he says what? The section 145 amendment has come by Finance Act 2014. What is that 145? 145 subsection 1 is what? Every assessee has to follow only either mercantile or cash. What is 145 subsection 2? Yes, accounting standards as notified by CBDT has to be followed. How many accounting standards are notified today? 33 are there or 32? 33? 32. It applies to individual, HUF, trust, AOP, BOI, cooperative society. How many? To whom it applies? Accounting standards applies only to companies. Does not apply to individual? It applies. It applies to even individual. What is the minimum turnover? My client came running, sir, what sir, you don't know how to draft balance sheet, I don't have any such asset. In the asset I got deferred tax asset. He came running, I don't have any such asset. You have written deferred tax asset, where is that asset? He came running, I don't have sir. I don't know sir, my article calculated. He got deferred tax liability, oh, come man, what you did? Sir, AS22 I applied, I wrote that. They thought in the class today only, I came and applied here. And it came with a resulted asset. Okay, very good. You should have told me at least now. Other, how will I face the client? Client is asking me, myself ignorant, client is still more ignorant, ignorance is bliss. Huh? So that is what I told you. At least you should have told me. Even I don't know, even he doesn't know. Then he will think, why should I pay fees? Anyway, so it applies to whom? Accounting standards applies to whom? That is why my practice is safe. Practice is safe. Pardon sir? Applies to everybody.
Who requires financial statements and financial documents?
No, everybody will prepare, no financial statements. He is telling whoever prepares financial statements, you have to follow accounting standards.
Financial statement signed by members of the institute.
Okay.
They have to ensure that accounting standards are
Okay, he is telling wherever members sign, they have to ensure that accounting standards are followed. One opinion, they are giving opinion. To whom it applies, that is what you have to ask the faculty first. What are accounting standards? We were grappling with the issue, I don't know what are accounting standards. Now what has come? Tax accounting standards, income confusion distortion scheme. Oh sorry, what is that? Income computation disclosure scheme. So ICDS has come, thankfully 1 year it is postponed. So ICDS has come, what else has come? Ind AS has come. So what is accounting standard? We didn't know, so many standards have come. What is it? Who should follow? Erstwhile Companies Act 1956, 211 section. So accounting standards were mandatory. ICDS, what is ICDS? I am restricting myself to Income Tax Act and not go beyond it. Now what is Income Tax Act 145(2)? It says accounting standards as notified by CBDT has to be followed by the SSA. If not followed, it shall result in a best judgment assessment under 144. So says section 145 subsection 3. Next section. All of you know 144, what are the instances? When can assessment be framed to the best of its judgment, ex parte assessment without the cooperation of the SSA? Where the SSA fails to file a return 139, 145, return, belated return, revised return. Then you don't appear for the notice under issued on 142(1), or you don't respond to the notice issued on 143(2) scrutiny notice, or you don't respond to the notice under 148. It shall result in best judgment assessment. Fine. One more instance of best judgment assessment, 3 more instances are there in 145 subsection 3 and not directly given in 144. What is 145 subsection 3? Assessing officer, correctness or completeness of books of account, wordings of the act. Correctness or completeness of books of account not satisfied shall result in best judgment assessment. Accounting standards duly notified by CBDT not followed by the SSA. Now ICDS not followed, postponed for 1 year shall result in best judgment. Third situation, method of accounting not regularly followed shall result in best judgment assessment given in 145 subsection 3. So how many standards are notified by CBDT? Today only 2 accounting standards are notified by CBDT. For income tax purpose only 2. Next year onwards ICDS, 10 ICDS have been notified. 10 ICDS I must compulsorily follow, I have no choice. Now I have no choice. Till today I have the choice, only 2 accounting standards I need to follow. But as per Companies Act, for true and fair view, I need to follow all the 32 accounting standards. Yes. Question is what about ICDS? ICDS is only for STI, statement of total income. Books of account need not be maintained in accordance with ICDS. ICDS should be followed in accordance with only for statement of total income. But accounting standards should be followed for preparation of accounts. I understood jugglery now. ICDS is a must to prepare STI. ICDS is not mandatory to prepare books of accounts. That too ICDS should be followed only by those persons who are following mercantile system of accounting, not required when they are following cash system of accounting. So I will not go much into that. So be careful. ICDS only mandated for mercantile system of accounting. Those are preparing only statement of total income only it applies. For books of account, regular accounting standards would apply in wherever applicable. But for Income Tax Act, limited purpose tax audit, as of today, only 2 accounting standards notified by CBDT I am mandated to follow. That's all. Absolutely no problem. Next, this 145 we discussed same thing. Another interesting section where any land or building or both is transferred during the previous year for a consideration less than value adopted or assessed or assessable by any authority of a state government referred to in 43 CA or 50 C. Please furnish details of property, consideration received, value adopted, assessed or assessable. Moment any property is sold, what the student does? Moment any property is sold, they come and give the details here. Not required, sir. First of all, I am questioning this clause. I am doing tax audit, 44 AB, section 28 to 44. Why are you asking me about 50C, capital gains? I am giving the tax audit report only for business, sir, not of the SSC, of the business of the SSC. You are asking me to comment on even 50C. That comes in chapter 4, 4E, 4D, 4E, capital gains. You are telling me to comment on even on chapter 4E. That is a different question. I am asking why are you telling me to comment in Form 3CD? Anyway, if only a property is sold, don't fill up this clause. The property should be sold. It may be held in the nature of a capital asset or it may be held as a stock in trade. If it is held as a nature of capital asset, 50C is applicable. Held as a stock in trade, 43C would apply. And if it is sold below guideline value, below stamp duty valuation, then fill up this clause. I have understood, sir. Land or building or both is transferred during the year below guideline value, then fill up this clause. Because this will have a link again, 50C, 43C. You will have to pay tax on deemed sale consideration. because you have been, the property sold below the stamp duty value or below the fair market value or whatever. Now, land or building or both. Suppose I sell tenancy rights, leasehold rights, development rights. What to do? The clause is clear, land or building or both means only immovable property. So tenancy rights, leasehold rights, development rights, etc. TDRs, all this you need not write here. Even if it is sold below stamp duty valuation or below the 50C value or 43CA guideline value. Okay? It is clear, land or building or both means only immovable property. Transferred during the previous year. It should be transferred only during the previous year. For consideration less than value adopted, you understood that. 43C or 50C. Now, quickly we move further. Yeah, this is given, this 19, clause 19 now. So this is another simple clause, amounts admissible in section 32AC, 33AB, that site restoration fund, investment in new plant and machinery, all those sections you just fill up here, that's all, it's a simple thing. Go to the provisions in case your assessee is making an investment, 25 crores or 100 crores, for example 32AC, 15% of the cost of new plant or machinery will be allowed as a deduction. You have to fill up all those clauses. 32AC investment in new plant or machinery, 15% of cost of asset, 33AB steel, coffee, rubber, development account, so on and so forth. Fill up all those things. Now, clause 20B, details of contributions received from employees for various funds as referred to in 36(1)(5). Now there is a provident fund. There is a fund to which the employer contributes, employee contributes. For employer, what is the due date? Which section to claim? And employee contributes, which section to claim? What is the due date? For employer it is 43B. That is before the due date of filing return of income. If the employee contributes, which section? What is the due date? Respective relevant statutory act. Okay? Whereas for employers it is before the due date for filing return of income. For the employees it is before the relevant date as per the respective statutory act. 36(1)(5)(a), here 43B. So what the department is doing, if the employee's contribution to PF is not paid before the relevant due date as specified, addition is made 36(1)(5)(a). But there are court judgments in favor of the assessee. They say even if the employee's contribution is remitted before the due date of filing return of income, it shall be allowed as a deduction. There are three Karnataka High Court judgments itself. SA Taroka, ENZ Infrastructure and Shabri Enterprises. There are three Karnataka High Court judgments itself. Not to talk about AIMIL, Delhi, and also there is a Supreme Court judgment, Allen Extrusions. So you need not worry, let the assessing officer make an addition. You can file an appeal and it will get knocked off at the first appellate stage itself. So ANZ information, Shabri, etc., etc. Gujarat State Road Corporation is wrong. Allen Extrusion, IML is okay, fine. Next. So please furnish the details of amount debited to profit and loss account being in the nature of capital, personal, advertisement expenditure. All this is asking. In Form 3CD, give the details of capital expenditure, give the details of personal expenditure, give the details of advertisement expenditure in any souvenir, brochure, tract, pamphlet or like published by a political party. Fill up all the details. Straightforward clauses. This is again amounts inadmissible in 40A. So interest, royalty, etc., etc., you know that. How much is the disallowance now? It is restricted to 30%. Earlier it was 100%. So it was a draconian provision 100%. It is only 30%. Now you should be happy. But for non-resident, 100%. So I think TDS Mr. Tarun is handling, I think. What is the topic, Mr. Tarun? Next session? What is the topic? Probably TDS only. So I will not waste time on that. What about 40A3? This 21D talks about 40A3. 11:30 is the time, no? Up to 11:30. So 40A3, T20, T10 it is no time. What is 40A3? Cash payments in excess of 20,000. So what happened today? I made a purchases of 1 lakh rupees. I went to this more departmental store. I went and purchased one washing machine, one television, one fridge. Amount came to 1,20,000. Washing machine, television, fridge, Naveen Khariwal is the name. I took the bill, cash payment I have to make 1,20,000. Make it 2,20,000. Make it 2,20,000. So if I give cash, 40A3 is applicable, not applicable. Why? Pardon, sir? I went to more departmental store, I made purchases, what all, one washing machine, television, and fridge, 2,20,000. I paid cash. What are the consequences? Come on, tell me. This is going to be application-based exam in future. They will give you the act. You are very happy. They are giving the books now, new syllabus. They are giving the act. Take the act, write down the question answer. It will be only application-based. Like this question will be asked. You will not know which section. Read. First, which section to read? 10 minutes over. You have to interpret correctly. Only 3 hours time. You sit and interpret 20 minutes only one section. ಚೆನ್ನಾಗಿ ಬರ್ದಪ್ಪ ಒಂದು ಎಷ್ಟು ಕ್ವಶನ್ ಬರ್ತದೆ 3 ಬರ್ತೀವಿ ಎಲ್ಲಿ ಬರ್ತದೆ ಸರ್ ಮಾರ್ಕ್ಸ್ ವೆನ್ ಯು ಗೆಟ್ application they are giving the act, what will you do in the act? No direct question, only application based will be asked. Like this questions will be asked. Immediately you have to think more than 2 lakhs. What is the provision 206 CA? What is it? TCS may be applicable. Immediately your client in office you have to see, sir, more than 2 lakhs payment cash. TCS is applicable. 1%. What is the liability of the more departmental store? As a seller, more departmental store, only 1 mil. Immediate thought should come 1%. TCS will be collected. What I will tell, sir, he will tell, Naveen, give me your PAN. I will tell, sir, I don't have PAN. You don't have PAN, then what to do? He will give you which form? Form 60 he will give you form 60. Fill up this form, sir, if you don't have PAN. I will fill up form 60. Name, address, sex, address, everything. Then he will tell me, total estimated agricultural income or non-agricultural income. What he is asking is total estimated agricultural income, non-agricultural income. I will write 8 lakhs example. Then he will tell, sorry, I can't take the form. Why? It is more than the maximum amount not chargeable to tax. In other sense, more than the basic exemption amount. But department will use, I have to interpret, no, oh, big man, big CA. What they are using, maximum amount not chargeable to tax. Simplified manner act, they would have told only more than basic exemption limit. No, maximum amount not chargeable to tax. That is Income Tax Act for you. So what is that Income Tax Act? First section, then subsection, then class, then subclass. After subclass, explanation, then item, then sub-item, then what? Notwithstanding will come. Then at the end is that this section is deleted with effect. You will read everything. I went on interpreting. So what moral of the story? Read it down, then go up. Anyway, what for me? I will tell my student, come you interpret this karke. You come and read that provision, then come and tell me karke. Everything they will explain, then this section is deleted with effect from. So much time waste. Unlike your Companies Act, very easy to interpret. If you sit down one section, if you get up one section, if you start walking one section. Income tax is not like that. In one section there will be so many subsections, clauses, subclauses, item, explanation. Every section will override each other. Notwithstanding. Everywhere. Anyway, so what I give him? I give him form 60. Moment I write 8 lakhs, he will tell sorry. Why? He wants the PAN number. If you don't have PAN, no problem. You have to need acknowledgement for having filed form 49A. So one more person will be sitting there. He will be providing services for PAN. You apply PAN, attach acknowledgement to form 60. Now give me. Next, nothing like that. More has to maintain that copy of form 60 for 6 financial years. For 6 previous years, more has to maintain that form 60. It does not end here. That form 60, you know what has to do? Today is the time of all uploading, electronic filing. He has to upload the information in form 60. In which form? Which form, sir? Form 61. One more form comes, he has to upload the information of that form 60 in form 61 online. And okay, I am uploading all the information. And that should be filed with whom? Joint Commissioner of Income Tax or Director of Income Tax, INCA, investigation, criminal investigation. For one PAN he didn't give. All the information about him is going there. That fellow will not sit quiet. Now criminal investigation, post is there. One letter is sent immediately. You purchase 2,20,000 or whatever. Where you have debited in books of account. Base is accounts. Successful practitioner, base is accounts. Everything debit and credit in the books of account. Unexplained investments, we tell. Unexplained expenditure 69C, unexplained investment 69A. He is not worried about 1% of the tax. Department is not worried 1%. They are telling they want to see where it went and it's debited in books of account, whether you got proven source. Where is the source for purchase of television, washing machine, TV, whatever. Fridge. That is not there. That is why 1%. Similarly, 194 IA, 1% property in excess of 50 lakhs. You think department is worried about the 1%? They want to see a track whether that purchaser has debited in books of account, source is there or not. Or the seller has paid tax under 50C. Stamp duty valuation. That is what they want to see. They are not worried about a 1%. Students will come, sir, 1% credit sheet, they claim TDS. Immediate 2,50,000, I mean, hey, claim TDS, 1%. Sir, I didn't even debit. Why did you claim that? 2,50,000, I didn't debit in my books of fund. I paid cash, that's why. So you have to be careful. Don't always think about TDS. One more column is there beside that, income. Worry about income more than TDS. See about the income. Whether income is offered to tax or not. Whether the investment is reflected in the books or not. Then claim TDS. We are more worried about TDS mismatch. What about income mismatch? Nobody is bothered. Anyway, 40A3, its matter is clarified now. More than 20,000. Can I make three points of time sum? Morning, afternoon, evening? Morning I paid again, afternoon I paid, evening. Or can I make 3 different dates? Today, tomorrow, day after tomorrow? If it is a loan, next 269 SST, 271D, 271E. 269 SSRE, 269 SSRT, violation of 269 SSRT will result in penalty in 271D or 271E 100% penalty. What is that? Loan or deposit? That loan deposit, now you add even specified advance or specified sum. Earlier it was loan, deposit and specified sum or advance now. What is specified sum or advance? Section continues in relation to an immovable property. Suppose even immovable property of given in advance, 1 lakh rupees in cash. You are showing in the balance sheet as advance. Moment it becomes an advance even for immovable property, you have to pay penalty 271D. So earlier it was going on. Wherever shortage, what you used to do? There is an immovable property in your balance sheet, they will show what? Advance received for immovable property. 5 lakhs cash or 10 lakhs cash. Against the immovable property, that loophole has been plugged by the department. In case, even if you give advance or take advance or repay the advance in cash in relation to an immovable property, violation of 269SS, 269D, resulting in 100% penalty under D and D of 271. Loan or deposit was always covered, no problem. 269SS, 269D. Sir, what about journal entry, sir? Credited in the books of creditor, debited in the books of debtor, the loan. What about journal entry? Is it a violation? Not a violation. Everything should be by otherwise than by account pay check drawn on a bank. Isn't it? 40A3 understood. Now 269SS and T, what about the loan repayment, loan deposit, receipt of loan or repayment of loan, receipt of deposit, repayment of deposit, receipt of specified advance and repayment of specified advance or repayment of specified sum or whatever. Now I am telling if it is by way of a journal entry, what do you do? Is it a violation, not a violation?
Not a violation.
Why? This is the way we write in exam. Whether this, yes, no. That the examiner will decide. Student will, yes, no. That is not the way to write it. We will decide. Paper correctors may decide yes or no. Then again they will tell 4-step technique, 10-step technique, all that. First write facts of the case. Take the paper, you will write facts of the case. But who wants facts of it? It's there in the question paper. You want to fill up the answer paper, there will be there. 1 page, 4 marks means fill up 1 page. How to fill up, write facts of the case. Who wants it? There in the question, we are not worried. Come straight away to the answer. Come to the point straight away. Get out of it. They give 97, I think, indirect taxes. Last attempt. Even 94 plus is being given in direct taxes. You write to the point there. Nobody is bothered over English. Write to the point. Crisp answers to the point. We are giving full marks. Out about. Anyway, 269 SST, as I rightly told, it's not a violation. Because it's a journal entry. It's not a violation. There are enough case laws. We will not discuss that. So, like this, various issues are there. You have to be careful. All this you have to comment in this Form 3CD. So, you should know the section first of all. If you know the section, read the section, practical application and then case laws. Don't start with case laws directly. First section, then applicability. See some examples. How to read income tax. Read the section. Then for every line you try to interpret. Then take some examples. After taking the example, practical application and then case laws. Because case laws may be for, it may be against. What is the basic purpose of the section? For example, why you say the advance received in against an immovable property. That also they are telling even if you receive more than 20,000 advance. Earlier you used to receive lakhs of rupees advance. Now it's telling not possible. I have to plug that loophole. Why? Because for shortage of cash, if there is immovable property, people used to take advance. And then they used to tell, sir, there is no shortage, I have that advance. They used to make one agreement. Next year they will cancel that agreement. So this is the purpose of the section. Why at all the section is introduced? Very, very simple. What to do? Go to the Finance Act itself. What is the intention of the provision? When you practice also. Now you have a case 56 to 7A, 56 to 7B. Why was it introduced in the statute books? Go to the budget, read that intention. Why the finance minister introduced such provision? Read the book, read that intention. Why it is brought in the statute. Then read the section. Then apply some examples. All the beautiful books are there. All books are good. Read those examples. Then come to the case laws. That's all. Anyway, one more section you need to remember, 40A3A. What is 40A3A? 40A3 you know. What is 40A3A? Pardon sir? Yeah, salary payable as on 31st March 2016. This year audit you are doing, for example, 31st March 2016, 35,000. 1st April you paid that amount in cash, 35,000 rupees in cash. So more than 20,000 again. Even that addition will come in next year, assessment year 17-18. Not only during the year, okay? Next. Quickly we need to go amounts deemed to be profits and gains 32 AC, AB or AC. Okay, fine. This one simple amendment was made, the central value added tax, CENVAT, it was earlier called MODVAT. So that replacement has been done. Now this is again this clause which I told you about this in the audit report. Whether during the previous year assessee has received any property, being share of a company, not being a company in which public are substantially interested, without consideration or for inadequate consideration, as referred to in section 56 to 7A. If yes, please furnish the details of same. So, to whom does this clause apply? It applies only to firm and a company in which public are not substantially interested. Okay, it applies only to two assessees, a firm and a company in which public are not substantially interested, meaning only a private limited company, in short, or a firm. What should they receive? They should receive property. What is that property? Being shares. Shares of which company? Shares of again another private limited company. It says a shares of a company in which public is not substantially interested. If you receive such shares without adequate consideration or for inadequate consideration, then it will be taxed here. So you have to report here. That too, if you are receiving shares, no problem. For adequate consideration, you need not report here. If you are receiving only for nil consideration or for inadequate consideration, then only reporting has to be done. Yeah, 56 to 7A. Where a firm or closely held company receives shares of another closely held company from any person, either without consideration or for inadequate consideration, shall attract tax as follows. Where the shares received without consideration and aggregate FMV exceeds 50,000, what will be the taxability? Entire fair market value. Where shares are received for an adequate and inadequate consideration and such inadequacy exceeds 50,000, difference between aggregate fair market value and consideration paid. Now this is another interesting clause, 29. Whether during the previous year the assessee received any consideration for issue of shares which exceeds the fair market value of shares as referred to in section 56 to 7B. If yes, please furnish the details of same. Have you understood this? Fair market value of shares is how much? It may be 10 rupees, maybe only 10 rupees. You have allotted the share for 1,000 rupees. So 1,000 minus 10, that 990 rupees you have to pay tax now. Now earlier what they used to do, I will not go much into this concept. Earlier what they used to do, companies, they used to go to the slum area. One case I will just discuss. They went to the slum area in that case. They got hold of 10 people residing in that slum area. They told him, we will apply for your PAN, give me your address proof, identity proof. They took the Aadhaar card or whatever, driving license or whatever. They applied for PAN, 10 PAN, they opened 10 bank accounts, deposited 1 lakh each and took that as capital, share capital. So shareholders, they all became shareholders of share application money, and that black money became white like this. 1 lakh collected from 10 slum holders. They applied for PAN themselves, they opened bank accounts themselves. They deposited 1 lakh in bank account, issued the check to the company, their own cash black became white. I understood. So that was taken in form of a share application money. So now that's why the Companies Act, rules have been changed. What are the rules changed? Now what is it? Within 60 days you will have to allot shares. If not, after the end of 60 days, you will have to refund the money within 15 days after the end of 60 days. As per the new rules, what is it now? You can't keep it as share application money forever. In this case, they used to keep it forever because they have no intention to repay them. Their own money has come back to them. Their own money has come back to them. They are not going to repay. So now they are telling within 60 days, you either allot the shares or at the end of 60 days, within 15 days from the end of 60 days, please repay the share capital. So like this, many tax planning, all this has been clubbed. Now it's telling 10 rupees share, you have issued at 1,000 rupees, I have no problem. Prove that FMV of the company is 1,000 rupees. If you prove FMV of the company is 1,000 rupees, as per rule 11U and 11UA, I will keep quiet. Suppose you have issued for 20 rupees, FMB is 1000 rupees, and you know the calculation, FMB as per our calculation comes to 500 rupees. Then balance will be offered to tax. Next, yeah, this we discussed, accepting loan or deposit. What about this, sir? Your account pay checks, you know, all this electronic clearing system. It is also other than account pay check drawn on bank, no? Your ECS and mobile banking, telebanking, what is that all? NEFT. What it says, sir? Other than account pay check. So all this was not there in the statute. It was there only by way of a notification issued in 2007. Then the government finally woke up and brought an amendment in 2014 telling that all electronic payments also now henceforth it shall not be treated as a violation of 271, 269 SS and 269 T. Earlier there was only a notification, that's all. Now, this we discuss now. Whether the assessee has incurred any speculation loss referred to in section 73, that speculation loss, if yes, please publish the details. Whether the assessee has incurred any loss. Now speculation. Okay. Whether the assessee has incurred any loss referred to in 73A in respect of specified business. One more research, in case of a company, please state whether the company is deemed to be carrying on speculation business. All that you have to write. Now derivatives, option, future. How to calculate turnover? Anyway, we are left with not much time. How to calculate turnover? Aggregate. Don't talk about old issues, sir. Talk about today's issues, 2016. Derivatives, future, option. How to calculate turnover? When shall it be treated as a tax audit? Yes, sir.
Profit.
Only profit. So profit should be more than 1 crore.
Yes.
Okay. Come out with the answers. What will do? 4480 can I apply? If it's less than how to calculate turnover? Question is how to calculate turnover for F&O business. F&O is a business or it is capital gain? Speculation is business or capital gain? F&O is speculation or capital gain? Or I have to offer in a business? How to calculate turnover? F&O, how to calculate turnover?
Take the absolute sum of absolute figures of the entity.
Absolute figures, it says take the sum total of all absolute differences. That means what is telling, there is a gross transaction of F&O, there is a net transaction. Gross transaction, net transaction. He is telling you take the net transaction, sum total of all net transaction. It may be profit or it may be loss. Take the gross sum total of all the positives plus negatives, ignoring the sign, and then see if the turnover is more than 1 crore. If it is more than 1 crore, go for tax audit. Have you understood? Meaning to say there are 20 transactions, out of which say 15 transactions are resulted in negative. 5 transactions are profit. You cannot net it off. You have to take the 15 transactions having negative sign as it is, take the 5 positive transactions as it is, all the net transactions, total them, pull them up. If it goes more than 1 crore, then it's a tax audit case. You have to take only the net result, be it positive figure, be it negative figure, ignoring the sign sum total more than 1 crore tax audit. Less than 1 crore, 4480, offer 8%. Offer 8%, there is no problem.
If loss is there,
That's what, sir, if loss is there, if it is an F&O business, there are 15 transactions of loss, minus 10 lakhs, minus 10 lakhs, minus 10 lakhs. 15 transactions itself are minus 10 lakhs into 10 lakhs, 1.5 crores. And 5 transactions, there is profit of 1 crore. So what will you do? Minus 1.5 plus 1 crore, only 50 lakhs, you tell no tax audit. Exactly our tax guidance note is telling, take 1.5 crores minus, plus 1 crore plus, it will become 2.5 crores, ignoring the sign, therefore it is tax audit. So no question of loss. For F&O business only for F&O business I am telling you. So then we come quickly now, I think 5 minutes more, okay. Clause 34A, I had a beautiful example there. Clause 34A, 34B, 34C, which Mr. Tarun will discuss, how to reporting of the TDS aspects. Straight away we will go to 37, 38, 39, 40, 41. TDS is going to do. What about it now? See clause 37. Whether any cost audit was carried out, if he has give the details if any of disqualification or disagreement on any matter, item, quantity, as may be reported identified by the auditor. If you take 38, whether any audit was conducted under the Central Excise Act 1944, if he has give the details if any of the disqualification or disagreement on any matter, item, quantity, Take 39. Whether any audit was conducted under Section 72 of Finance Act 94 in relation to valuation of taxable services, if yes, give details if any of disqualification or disagreement. So what is the common thread connecting all these three sections? What is 37, 38, 39? Pardon, sir? Audit under other statutory acts, he says. Okay. So audit under other statutory acts is asking me to comment in my tax audit report. What is it? Clause 37, 38, 39, service tax audit, excise audit, cost audit. In the old form 3CD, what they used to ask, whether the books of account, whether cost audit has been undertaken in your case under 233B of the Erstwhile Companies Act 1956. If yes, enclose a copy of cost audit report. That's all they used to ask. Nothing about excise audit, nothing about service tax audit. In this new form, they are asking 37, 38, 39. If any service tax audit, if any cost audit, if any excise audit is conducted, fine. Then in that tax audit, is there any disqualification or disagreement on any matter, item, quantity as may be reported or identified by the respective auditor? Then only you give the details here. Even though you have got cost audit report, you have got service tax audit report, you have got excise audit report, in case there is no disqualification, you need not report here. So that's why I told you the department has become very clever now. Take the vegetables, you wash the vegetables, cook the vegetables, serve the vegetables, take a spoon and make the meat now. So they are telling we can't go through the report. You straightforward give me what is the disqualification, if any, in the cost audit report, service tax audit report, or excise audit report. Give me straight away the disqualification given by that auditor. That disqualification I shall link into your trading account or your income and expenditure account in case of a profession, and I will see whether it affects your trading account or income and expenditure account. What is the disqualification on any matter, item or quantity? I want the disqualification to be given. That is why you know in that 16 qualifications they say reports under other acts have not been received by the SSC, have not been collected by the SSC. They have not been given to me. There I will write not given tick and here I will give the details, disqualification. See very carefully, you have to correct everything. Somewhere or the other they will catch you. So the question is, next question comes, now you understood, service tax audit, excise audit, cost audit. When is the last date, sir? Assessment year 16-17 tax audit? 30th September. Before this, will you get cost audit report, service tax audit report, excise audit report? You people are in the field, you are doing the work. Some may be specialized in taxation, some may be specialized in VAT audit or service tax audit or cost audit or companies audit, whatever. Can you get service tax audit report, excise audit report or cost audit report before due dates of 30th September? Because now you have to go and do the audit and you have to fill up clause 37, 38, 39. Or you have the report, you will tell Sumna, keep it aside. That is different. If you don't want to comment, I don't have only, then okay, that is very good. Can you receive the cost audit report, service tax audit report, excise report before 30th September? No. Correct. Then why are they giving? Why are they asking me the new clause, new amendment 37, 38, 39? Yes, sir. What is the logic? Or suppose I am getting the cost audit report of earlier years. Now, 2014, 2012. You know that excise audit. Anybody done excise audit? Anybody done excise audit or cost audit, service tax audit? 2012, 2013, 2014 will be carried on now, and now you will get the report. Suppose I have got the report of earlier years now, in this period, before the date of audit report. Then shall I comment on that if there is a disqualification? Or it should be only of 16, 17, or it can be of earlier years? It can be even of earlier years. Can it be of earlier years? Why is this clause brought in 3CD? Pardon, sir? Earlier years reassessment they do, excise he says. Some valuation problem, 14, section 14 some valuation problem, excise act. Audit is done. So now you will see the audit report, there is disqualification. Will you report or not?
Yes.
He will report, he says. I understood now, 16, 17, there is no chance of you getting service tax audit report, cost audit or excise, practically. You will get the report only of earlier years. Next question I will ask is, why should I give the report of early years in the report for 16, 17? I have got the audit report of service tax, excise and cost audit for 14, 15, 13, 14. Why should I give that disqualification in report for 16, 17? What is the guidance note telling? When in doubt, go to guidance note. That is sacrosanct. I may have my own opinion. You have to go to the guidance note. What does the guidance note say? Yeah. The tax auditor, para 66.3 means this is para 66.3 of the guidance note itself. The tax auditor should examine the time period for which the service tax audit, if any, has been required to be carried out. Information is required to be given only in respect of such service tax audit report, the time period of which falls within the relevant previous year. That's what the guidance note says. In effect, the information is required to be given in respect of that service tax audit report, which is received up to the date of tax audit report. What is your opinion now? This is the opinion of the guidance note. What do they say? That means what? That means what, sir? Not required. She's telling not required. I will give only if the guidance, the report belongs to assessment year 16-17. Based on the guidance note, only if it is of 16-17 I shall give. Otherwise I will not give. Tomorrow if they ask me, I will tell yes, it is mentioned by I am member of the institute. Guidance note is applicable to me, tax guidance note, audit of, so I have given, I have not given details. That is what it says. Information is required to be given only in respect of such service tax audit report, the time period of which falls within the relevant previous year. So quickly now, two more clauses, last 3 minutes. Pardon?
One question can I ask?
Yeah, please.
Regarding date only.
Sir?
Regarding date only.
Yeah, please.
May I confuse, sir, actually. On income tax return, there are two things. One is date of audit report. One is date of signing audit report. What is the difference, sir?
Date of signing the audit report.
Yeah.
Date of audit report.
And date of audit report.
So you are putting two different dates.
No, I put same.
No, you have to put same. You have to put same. Date of signing audit report and date of report is same. You have to put same date.
But why they give two?
Pardon?
Why income tax department kept two things there?
No, there are 3 columns. No, name of the auditor, PAN of the auditor, and then they are asking all those details. Date of audit report. So basically they are saying the date of audit report is for purpose of levying penalty 271B. Date of signing audit report and date of uploading audit report you try. You put date of signing audit report as 2nd November and date of audit report you put as 30th September. 30th September, 2nd November. Date of signing is later. I am uploading the audit report today. There are 2 things, date of signing, date of uploading. So that cannot precede this. That is important for penalty 271B and also for the institute to have a look at how many reports I have signed. Exactly link will go. Only 60 reports we can sign. That is a good question you have asked. Okay. So that link will go more than 60 audits or less than 60 audits and also for purpose of levying 271B penalty. You know what is the quantum of penalty? Pardon? 1.5 lakhs or 0.5% of turnover or 2 lakhs. Whatever. Okay.
Thank you, sir.
Thanks. So last 2 minutes only, 2 more clauses. I will not spend much time. He is asking now details regarding turnover, gross profit, etc. for the previous year and preceding previous year. See earlier what they used to ask department, they used to ask only the turnover of the relevant year under audit. Now he wants comparison. So he is asking even preceding previous year. Total turnover, gross profit, net profit, stock in trade, materials consumed. Very clever. Now he is asking, what is the difference also. He will come to know what was the net profit ratio in earlier year, what is the net profit ratio in current year, what is the GP ratio in earlier year, what is the GP ratio in current year. This will lead to survey. This information, department will use it for survey, search and seizure. See the net profit ratio was earlier so much, gross profit ratio so much, now it is so much for comparison. Last clause. TDS we did not touch. The TDS itself I call audit ke andar audit. I am doing 4480 tax audit. In the TDS audit, if you have seen that example, it will take at least half an hour. TDS audit, so many columns you have to fill. So many columns. So, at the last when we come to the last clause 41, department is very courteously, very politely asking you, having filled up so many clauses, so much work you have done, please, it starts with please. Last clause 41 says, please furnish the details of what demand raised or refund issued during the previous year under any tax laws other than Income Tax Act and Wealth Tax Act. It does not stop there, along with details of relevant proceedings. So they are asking you whatever refund you have received or whatever demand is issued under all the acts on this earth other than Income Tax and Wealth Tax during the year, it does not stop there. It also says and other relevant proceedings. For example, excise demand, excise order was received. You filed an appeal with such stat. Appeal is pending with such stat. You have to give the details. This is the demand raised and this is the relevant proceedings pending before the stat. And then you can think of the taxes: VAT, excise, service tax, customs, municipal tax, luxury tax, STT, CTT, central sales tax, professional tax, etc. And you think of more taxes, details of proceedings to be given. If I click on the ITR utility software, how many years it comes? Details of refund issued, demand raised. It starts from 1981-82. It will end on 2020-21. If I click there in ITR utility software, see here it is 80-81 it starts. Demand received, demand raised or refund issued during the previous year of any year it may be under all the tax laws other than income tax and wealth tax. Ends on 2020-21. I can give all this, which central excise duty, customs duty, service tax, VAT, state excise duty, other indirect excise duty. So what is the moral of the story? All the acts are connected now, and this is all being electronically filed. Everything is PAN based. So today the assessee has no chance at all to escape. Now you can't even tell 0.11% chance, absolutely no chance. Because every month here in Bangalore you take the service tax commissionerate, excise, customs, income tax, all commissionerates, they meet together. They have an exchange of information, they exchange their views, thought sharing process, data they exchange, and what is happening in each department everybody knows. And plus everything is computerized now. This tax audit itself, you saw that how all information are being exchanged, including VAT, service tax, excise, customs, how cleverly departments made to do everything. At the end very beautifully it says all demands raised under any other tax laws. So all information is there in this one form which is being electronically uploaded. It is there in the department website now, with the department. Okay? Yeah, drop down list pertains for financial years 1980-81 to 2021. Important points for tax auditors: maintain detailed working sheets, SA 230 worksheets, time sheets, query sheets, explanatory notes, checklists, materiality factor, etc., etc., all that. All the certificates you continue to take. Although the latest Form 3CD, you need not collect any certificate. You continue to collect all the certificates you to collect earlier. Okay, and just keep it in the file. One more important information: yesterday Karnataka High Court has given a judgment on 234E. Judgment has come on 234E. Prior to 1st of June 2015, how is 234E levied? 234E is levied in the intimation passed under 200 capital A. So if the 234E was levied before 1st of June 2015, Karnataka High Court has given a decision in favor of the assessee. What it says: before 1st of June 2015, section 200 capital A did not have the power to levy penal fee under 234E. Why? How is 234E levied? It is levied in 200A intimation. So if you see, there is 200A, there is 234E. When did 200A come into the statute books? When did 234E come into the statute books? 200A came into the statute books before 234E, and 234E came after 200A. So when 234E came in the statute books, 200A was not simultaneously amended, but department levied 234E in the intimation 200A. Therefore, the courts are held in favor of the assessee. No problem. In case your office has filed any appeal or any rectification or any revision petition 264, you can win easily. You would have won easily. After 1st of June 2015, Jaitley realized his mistake, and by last year's budget, he brought in the amendment in 200 capital A, thereby giving the power to 200 capital A intimation to levy penal fee under 234E. So Karnataka High Court is in his favor. There were other judgments also in your favor. Sepia Institute, Amritsar bench, Indirani's case, Chennai tribunal. So all these were in the favor of the assessee. Ahmedabad bench is also there. Okay. So at the end now, I would like to thank the chairman Chikasa for giving me an opportunity to address the students. I also thank the students for being tolerant of me in these times of intolerance. Thank you very much.
Thank you for the wonderful session, sir. I'd like to call upon Mr. Swami to give away the token of appreciation to our speaker. This concludes the first technical session. We now break for tea. The students are requested to kindly reassemble in 10 minutes.